Good morning, everyone, and welcome back to the Daily Hunt from Multibaggers. It's Monday, June 8th, 2026, and we've got a fresh batch of AI-generated insights to kick off your trading week.
That's right, Ethan. Our systems have been hard at work analyzing a moderate volume of social media discussions from yesterday, June 7th. We flagged a few key stocks, and the sentiment, well, it's a real mixed bag today. Lots of bold claims alongside some serious caution.
You know, it always is, but that's what we're here for, to dig through that noise and find where the real potential lies.
So let's jump right into our first stock, Micron Technology, ticker MU. The community sentiment here is overwhelmingly bullish, even after some recent pullbacks.
Absolutely, Brooke. There's a strong belief out there that MU is in a heavy bull trend, poised to reach new highs, potentially even by December. Users are pointing to unbelievable amounts of money coming into the semiconductor sector, especially with all the AI catalysts. And honestly, the historical performance backs that up. Massive growth over the past year. Plus, that PEG ratio of 0.3 looks incredibly attractive, suggesting it's undervalued relative to its growth.
I hear the optimism, Ethan, and yes, that PEG ratio is appealing. However, we need to talk about some red flags. MU's debt-to-equity ratio is extremely high at 14.9, which signifies significant financial leverage. That's a huge risk if things turn south. And let's not ignore the insider trading data. A net sale of over 222,000 shares in the last 6 months, including the CEO cashing out $38 million after a surge. Insiders usually have the clearest view, and that kind of selling is a cautionary signal. Also, while the growth is there, a PE of 40.81 suggests a lot of that future growth is already priced in.
Fair points, Brooke. But the AI story for Micron is compelling, and the upcoming earnings on June 24th could be a huge catalyst to reconfirm that bullish narrative.
Potentially, but the current financial structure and insider behavior outweigh the future possibilities for now. Micron's previous ratings in our podcast have swung a lot, but its last was a cautious buy on June 5th. Given these new concerns, I think we have to be more conservative.
Understood. For MU, our AI-generated insights lead us to a verdict of stay away for now.
Next up, let's talk about Rocket Lab, RKLB. This one often comes with a lot of hype.
Oh, it certainly does. The buzz around RKLB is palpable, largely fueled by the anticipation of a SpaceX IPO. Users are calling it SpaceX IPO mania, expecting it to pump related stocks significantly. The community sees it as a prime speculative play, believing space stocks have cooled off and are due for a run-up. Plus, Rocket Lab is showing incredible revenue growth, and critically, insiders have been net buyers of over 1 million shares in the last 6 months, a strong vote of confidence.
Ethan, that insider buying is definitely a positive signal, and the revenue growth is indeed impressive at 0.635. But we cannot overlook the fact that RKLB is not currently profitable. Its net profit margin is negative, and so is its EPS. The debt-to-equity ratio is 6.124, and its price-to-book ratio is a staggering 27.9. This isn't an investment based on current fundamentals. It's pure speculation on future potential and external events like the SpaceX IPO. Its high beta of 2.499 also means it's extremely volatile. RKLB's history on our podcast has been mostly stay away or speculative gamble, with its last rating on June 1st being stay away.
I see your points, Brooke. It's a high-risk, high-reward situation for sure, but the optimism and the insider action are hard to ignore.
Given the fundamental profitability issues, it's a difficult case for traditional investors. For RKLB, our verdict is speculative gamble. Approach with extreme caution.
Moving on, let's discuss Broadcom, AVGO. We've seen some interesting chatter here, with one user going all in after a dip, and another user attributing recent portfolio losses to AVGO's earnings, Ethan. It really highlights the conflicting sentiments right now. You're right, Brooke. But let's focus on the positive sentiment first. Many users view that recent dip, tied to earnings guidance and a broader semiconductor sell-off, as a massive overreaction. They see AVGO as a fundamentally strong company with killer earnings, making money hand over fist, especially with its role in the AI sector. The PEG ratio of 0.71 suggests it's undervalued relative to its growth, which is exactly what growth investors look for. While the revenue growth of 47.9% and net profit margin of almost 39% are truly exceptional and demonstrate its operational strength, we cannot overlook the high valuation. Its PE ratio is over 64, and price to book is nearly 21. These are premium prices. Yes, a PE below 1 is great, but a high PE means there's very little room for error. The market is highly sensitive to any missed expectations, as shown by the recent chip wreck and the CEO's unexpected message on AI and software.
Also, the debt-to-equity ratio is still quite high at 74.
It's true that the recent volatility underscores how sensitive the stock is, but some see Cathie Wood buying into tumbling semiconductor stock as a contrarian bullish signal, which I find intriguing. Broadcom's previous ratings have mostly been stay away, but it did get a cautious buy last week on June 4th.
Considering the strong fundamentals and growth potential, but also the premium valuation and sensitivity to market sentiment, I think we should maintain that cautious stance. For AVGO, our verdict is cautious buy.
All right, let's quickly round up today's candidates. Investigate as buy? None. Investigate as cautious buy? Broadcom Inc., AVGO. Investigate as speculative gamble? Rocket Lab Corporation, RKLB.
And that wraps up today's Daily Hunt.
Before we go, a quick but important reminder. This podcast is for informational and entertainment purposes only. The content is generated by artificial intelligence and does not constitute financial advice. Listeners should conduct their own research or consult a licensed financial advisor before making investment decisions. We are not responsible for any losses incurred. The market is a wild place, and knowledge is your best asset.
Thanks for tuning in.
We'll catch you tomorrow for another Daily Hunt for Multibaggers.